update. So we're looking here at the weekly chart. This is the current week and this is the current move that's going on. This, we all know that this is moving in a much bigger, grander ending diagonal. 164 is that neckline that we are in. There is an ending diagonal that we're moving into. The projections are 160 and 8 and 170. We're looking at that wave C here. So the market, remember the breakout point was actually at 158 and 159 and all the way to 168. You're looking at 1,000 points, not very feasible by the way in this issue, because the issue can actually move 700 points per day. We are right now inside of this ending diagonal, so making entries will mean that we respect that we are in this ending diagonal. We find that this ending diagonal is always showing on our shorter term charts as we move higher, as we move on. That is okay. Let's take a look first at the daily, and that is the target that we got hit today. 165 actually showing here. We did 164 point, I believe 164.6, or so we're right here at the top of boundary of that ending diagonal. We still expect to do 167 on the spike as shown here before we have a correction back to the cycle bottom. So remember, this is an added cycle. There's an addition of a consolidative cycle to the higher degree cycle. Any corrections should really respect the breakout high for the months. 159.46 is right there, 159.38. so a correction will take us back to that cycle bottom, 156. We did this before, but it is again too academic. We will not get that correction until we get to 168 and 167.23, and therefore we're just showing it to know that we're on the right side and we should not have any fears of buying 164 and 163 plus. It will take us to 167 because there will be many of us will consider the market has stopped. We really want to stand out, if not go short. No, this is still going to do 168 on the coming momentum pictures that we'll be showing. So we still have room to take profits all the way into 168. So let's now take a look at the internals. This is the current segregation. This is probably a correct segregation. It's a wave 3 and extending, even though we are labeling here a 4A, a 4B, a 4C, but in reality on that 4-hour chart, right, we have an extension of that wave 3, and that would mean we're going to get a 9-wave swing. So let's take a look at this very closely now, because wave 5 will take you to the next neckline. That's what this is all about. There is a 1 2 here, there's an internal 1 2, there is a 3, there is a 4. Alright, so there's 3A or 4A, 4B, 4C. Okay, this was wave 5. If it were going to do a stronger correction, it would try and support on that neckline. It did not. On the 15-minute chart, this is the pivot level on today's 15-minute chart. Of course, we would have made an excellent buy, and we are looking to take profits at 162. Now of course we are 160. We did 164 plus. We'd also want to keep focus on the fact that we have contested the upper boundary of the ending diagonal altogether in a wave 3. We're gonna be contesting it in another wave, I believe 5. Could take us to that 167. So let's take a look. So this was there was of course a strong profit taking, it's very strong correction. We're back to 161.44 internally here. You have a 1 2, this is a 3, this is simply a correction 4. Alright, we segregate it on the 15-minute chart and get an entry, make an entry, because we're bouncing at the level at the top of an internal level 1. So even the segregations here show that this is an internal wave and that this is a 1 2. So for us traders, the important segregation comes in what we're gonna trade. We don't really need to keep or to hold on to former labels if we're not going to be trading the move down that far. Right, so we're only interested now in this final spike into 167 and 168. We're looking give it negative momentum, so this is lower degree cycle 1 2. There's a neckline of course right here. This is now an internal level 1 and internal level 2. Needless to say, all this is a 3. You're going now into a 4, we're going into a 5, and at that point we're still doing level 3, end of wave 3. So that is showing here as a wave 3, I guess. This is just a 5 and this is a 4, and the market is still going up into with 9. Actually, we know this is an extension because the momentum continues on the 1 hour chart, and we should just add the labels to one another. So what we're showing as a 3 is really a 7, and this is an 8, and then we go up into a 9. I believe these traders that are doing Elliott will understand what we are talking about or looking at. Okay, so the market is really a buy at that point, at that level. We really expect a bounce, right? At the most you're gonna be getting that bounce at 161.2, 161.15. Current market is 161.5, so you just want to have entries at 161.3 right now. All right, the stop is just at that red arrow here. We just want to stop at level 2 or a hedge to go out of the position, but you really just want to have a stop or hedge at level 2. 160.5 entries even at 161.5. There's gonna be a bounce. Of course, you would expect to see this is a 4A. There's gonna be a 4B and a 4C. Can do some kind of a triangle until tomorrow. This is just a 15-minute chart. You still have a supporting formation, but we're on the buy side. You're bouncing at a level 1, internal level 1. You're going to be doing 164 one more time. Now, if this is really a wave 5, like we would hope or believe it is, ultimately, after doing ABCs into that correction, this is full correction here. After doing that ABC, you're going to be doing 138.2, 166.10, 167. These are the projections that we are looking at. Remember, there will be a lot of shorting activity at this level, and there are a lot of stops, and this will fuel spikes all the way into 170. If you're shorting 167, you must have a stop at 170. So you get the vision of what we as traders always create. If you really have a stop at if you really are going to be shorting 166, you're gonna have a stop at 169 at least, and the market takes out both, fills you at 166, attempts to take a stop at 169. So we want to be on the right side of the floor. This is dictated by the momentum. This is cycle 3. For short-term traders, we buy internal 15-minute pivots all the way into 167. For swing traders, if we have not yet collected, there's no need to panic for this correction. We're gonna be seeing 165 and 167 again. We should, of course, we should have collected at 164 and 163 plus. All right, a better money profit accumulation than missing out on a correction, or if there is a sudden correction altogether.